Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome back the dynamic duo from DMG Blockchain to talk about earnings, give us an update on their growth, strategy, and outlook for the remainder of 2024. Before we get into all that though, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of DMG, how you think this miner's position moving forward, and your outlook for the last few months of the year. Now with that being said, let's get into today's interview. Okay guys, that's right. Today's video, we've got the duo back from DMG Blockchain, Stephen Eliscu, COO, and Sheldon Bennett, the CEO. We've got a lot to go through in today's presentation. Hot off earnings, we were talking about some immersion before we started filming, and obviously the go-forward growth strategy for DMG for the remainder of 2024 and looking ahead into 2025. So Sheldon, Stephen, great to have you back on the program, and thanks so much for making the time today.
No, thanks for inviting us back.
Of course. Now, it's been a few months since we chatted, so a lot's obviously been going on. It's the hot months here in Canada, in BC specifically. You mentioned that you're actually out at the site right now, taking a look at the location. So I wanted to get a quick update since our last discussion, really what's new or newsworthy at DMG.
Yeah, I think there's a few different updates. As I mentioned before we started, I am up at Christine Lake right now, our main facility, just going through a few things with the electricians. We are almost complete in some electrical work that's been taking a bit longer than we wanted to finalize what we need to do to energize the rest of our T21s. But we do see that happening during this month and that we will have our entire T21 fleet up and running. So that's good news. But outside of our expectations on the T21s, we've had some really good updates recently about Systemic. And just to remind you guys and the viewers out there, Systemic Trust is a fully 100% subsidiary of DMG. We've invested $3.5 million into it to date. That money's gone into building out the team. The team, for the most part, are ex-Binance Canada employees that when Binance left Canada, we hired Lawrence Trong, their CEO, and other key employees from there. We've applied for our letters patent earlier this year. We've actually received the letters patent back. So now we are actually a trust company. You can look us up in Alberta. You'll see of all the Alberta trusts, there's 10 or 15 in there, maybe 20. I can't remember the last time I looked. But you'll see Systemic Trust in there as an actual trust company, like other trusts out there. We're not a qualified custodian yet. That's the next stage. To become a qualified custodian, we need to go through some audits. We need to go through some compliance checks. And we need to fund the company with $10 million in working capital, which DMG plans on doing itself. Once we achieve all of these things, then we will become a qualified custodian. So the difference, just for those that don't know, with letters patent, we can hold digital assets for first, second party. So like DMG's digital assets, things that are related party. For a qualified custodian status, then we can hold third party assets. So this is when, if you wanted to have an account with Systemic Trust to put your Bitcoin there, you could do that. It would be, fully licensed bank in Canada, trust, not a bank, similar. And it would be fully insured, following all the rules and regulations that any other trust in Canada would have to follow. So I think a lot of our shareholders and viewers don't quite understand the significance of that in our Core Plus strategy. But, to be a company that has a digital trust, that is a Bitcoin miner, that has a clean energy supply pool of blocks. These things all kind of come together and are creating a very interesting ecosystem. DMG, we've been working on this for a few years to become the only, so far, I mean, we haven't seen anybody else try and enter this market yet, but the only carbon neutral Bitcoin mining ecosystem operating, whereby we can build carbon neutral blocks in a carbon neutral pool using carbon neutral energy sources. And now with the trust, we can go out to the traditional financial markets and say, hey, ETF A, B, C, D, do you want to move all your Bitcoins around in a carbon neutral way? Do you want to trade your Bitcoins in a carbon neutral way? Are you interested in carbon neutral generated Bitcoins to put on into your account or on your balance sheet that are devoid of, the carbon it would have in a regular Bitcoin? And this is something that really doesn't exist until we started creating it. Nobody was creating this, but now we have a supply. We have hundreds and hundreds of carbon neutral Bitcoins that we own and have created. Others have created them on our pool as well. And, we have a way to move them around without carbon interfering in that movement. And that's really important. And the other part that we did with Terra Pool is we made it OFAC compliant. The first time we did OFAC compliance is when we run Marapool. That was a service we gave to Marathon years ago. They turned it on. They didn't get the best response from the network. Bitcoin maximalists didn't really like it very much. But it was a different time. I think nowadays, when you look at what the SEC is doing in the US and the investigations and, what's going on in financial markets and the big players getting involved, I don't think anybody's going to say, no, you shouldn't follow OFAC regulations in your Bitcoin transactions. And so, when you look at something that, is OFAC compliant, that we can custom build blocks, that, can move the largest ordinals around, and is SOC 2 Type 2 compliant here in about a month or so. So financial institutions can work with us. We have a great relationship with Fireblocks, which allows us to work with literally hundreds of different institutions and exchanges. All of these things have taken us a long time to build, and some of them aren't quite done, but they're all coming together. We have this Core Plus strategy that is, going to allow a whole ecosystem that is compliant with regulations and compliant from an ESG point of view that just doesn't exist right now.
And this is really about giving the financial institutions an option. So when we talk about being OFAC compliant, our view is not to censor the Bitcoin blockchain, but to give financial institutions this option they never had of being able to send Bitcoin without adding carbon and without commingling with bad actors. And we hope to have systemic trust up by the end of the year. It's going to be largely dependent on the time frame of the regulators. And Terra Pool, as we talked about on our earnings call, to have that a new version of that up very shortly here, and as Sheldon mentioned, with SOC 2 compliance as well.
Just a couple of questions on that. So, I mean, first thing, I remember 12, 18 months ago when there was talk about producing green Bitcoin. Would there be a premium attached to that if there was no carbon used in the creation of that Bitcoin? Is that something that you think will happen, or is it more about ESG compliance?
I think there's both in there. I mean, so just when you think about, we're a Canadian company, so we'll just talk about Canada. When you look at an RBC, for example, it could be any large Canadian financial institution. In general, they all have some type of compliance or policies or programs around ESG. And, for, say an employee of one of these institutions that wants to fly from Toronto to Vancouver, and I've said this before, when they buy an Air Canada ticket, they pay the $37 to plant the trees to offset the carbon from the flight, because that's their company policy. Right now, if one of these institutions wanted to move Bitcoin around, the only way they could do it is with carbon, because there is no other way to do it. But, by creating a carbon-free way of moving Bitcoin around and them knowing that it exists, we believe their policies will kick in and they'll pay that premium to use our system. And I think that's a good thing, because, they're trying to get more, these policies are trying to get more and more people to be carbon conscious about what they're doing. And by creating a sort of a carbon conscious way of moving Bitcoin around, we think that this is something that, although it's not being used right now, we think that this is something that will be adopted quickly once it is up and running and the market knows that it works and it can be trusted. And so that's kind of one way we really think about what we're building and why we're building it. And as I said, it's not easy. Steve and I have been at this for a few years. We found some things we thought were really simple to do were really, really hard to do. Working with institutions is very complicated. They have lots of rules and regulations that we've had to learn about and navigate and figure out how to work with. But we think we're coming to the end of that. And, our ability to get this to work with large financial institutions, at least I believe, is going to come in the next few quarters. And so we're pretty excited about that. Is there a premium? I think so. When you look at sustainable Bitcoin protocol, they're getting a premium by attaching a token to Bitcoins. I don't know how much trading of that and moving around of that is working, but we do know that people have been buying these tokens. We like this idea. We support what they do. We're kind of support anybody that wants to work in the world of trying to create carbon-free or understanding carbon-free movement of crypto, or creating it carbon-free. We'd love to work with anybody that wants to, do this. And, what we're saying is that you can create whatever you want. You can create the token, is great, but every time you want to move that token around or that Bitcoin around, it'd be great if it went through TerraPool, because then that movement, I don't know how you would token off the carbon that would go from the pool to move the Bitcoin around after you have the token, right? So because there's so much carbon in all the other pools, we kind of create this ecosystem where we think, once it gets out there that you can do this, there'll be a lot of transactions that will want to come through our pool.
So it's effectively like, where it's already been produced with carbon, it's the case of there's like you're paying a charge to reduce the carbon offset in terms of how you would reduce, like if you were going on an airplane, you'd reduce the carbon offset if you want, by choice, if you want to. Yeah,
so we would have to charge a bit because we'd be creating custom blocks. But this is a small amount in the world of, the cost of moving Bitcoin and trading Bitcoin. And the other thing is a lot of people know that there is like a sustainable trading group out there out of the UK. You might have heard of them, that work with all the major banks, and and this is for traditional equities and stocks and bonds market, is how are they going to bring carbon-free trading into the system there. And so the system's really just a lot of computers and a lot of computer trading and trying to get gold seal buildings and carbon-free power into these buildings. But if you look at what they're trying to do, we've already created that for Bitcoin trading. Anybody that trades Bitcoin that wants to work with us can put all their trades through TerraPool, and they're already compliant. And so this is really an interesting thing, is that when you look at what's happening in traditional trade finance and trade, all of that stuff that they want to have at zero carbon operating for all those trades, we've already achieved that. We've done it in Bitcoin. And Bitcoin's done it first. If you look at the world of trading, we've done it before the rest of the traditional finance and trading has done this. So
have you sort of approached miners who are using like 100% efficient energy, like hydro energy, or there are some miners that do quote 100% on their presentations.
Yeah, we know all of them. We've talked to them. Some of them have worked with us. Some of them we think will come back and work with us again. We started this with Argo. A lot of Bitcoin has been mined in the past with Argo and a few others that were on TerraPool. We've run it quite a while on our own as well, as we've been working out different software upgrades. We're really trying to make this very robust. And in doing that, we've learned quite a few different things on our own and with partners on the pool. One of the things that we have included is something called Helm. Helm has been our software that we've licensed in the past to people to run large mines. It's very similar to Foreman. All the difference was Helm was created and running before Foreman even existed as a company, as I've told many people. And so we've been, running mines for a long time. And part of what we're doing with TerraPool is that if you onboard with TerraPool, you get Helm for free. And so you've got this whole management software. Instead of paying Foreman for it, you would get the same type of thing that we've developed over 8 years or so, that you can use, save you some costs as a miner, because you wouldn't have to pay to another third party, and you would get the operations of your mine plus the operations of your pool all in one dashboard. And so things like that help a lot. We're looking at an integration right now into STC, so that if you wanted all of your Bitcoin that's produced from the mining operations you have from your hash rate to go into a regulated trust where it's insured and you have all the security around it, and you have the layers of security if you want to have multiple people in different ways to release and move Bitcoin around, it could all go there in a very safe way to hold your Bitcoin, especially if you're growing your HODL like we have over the years. And then we're also working with exchanges that will give some really good transactional fees on transacting that Bitcoin if you want to sell it in the future. And so these are all parts of where we think we can help out in people that have green Bitcoin. That one, we want to help them save money on making money on that premium you talk about. We've said this before. We're trying to get a market where there would just be like a BTUSD ticker where you could click to buy it or sell it. We're trying to make a market where it's just carbon-free Bitcoin that were produced by people on TerraPool, and we have the registry of all those coins, and those ones could be traded back and forth. That's a little bit farther out there. It's easier for us just to move carbon-free to start with, because it's a much simpler transaction to do than to move carbon-free Bitcoin. But we see that happening in the future, and like I say, we still have a lot of our carbon-free Bitcoin. We know where a lot of it's gone over the years, where it's been sold to and who has it. And so, as more and more people are on the pool and there's more carbon-free Bitcoin, it's similar to, sustainable Bitcoin protocol, just a little bit different because it's not a token, it's the actual coin itself. But we can prove the provenance of it. So we think there could be a premium for that. We also think, and we've kind of gone back and forth with a few different people on this, but we also think that there's a premium for carbon-free hash rate. And so when you look at a lot of these people that are selling hash rates, so somebody will come and, the BitOdas, now Luxor, and a few others that are doing these hash rate markets. In general, you have somebody that wants to buy hash rate and take on the volatility risk of the yield of that hash rate, whether they make money or lose money on what they pay for it. We think there's a premium because the same type of institutions that we're talking about that will plant the trees when you take the flight, or there's a lot of those same institutions that will do hash rate. But right now there is no hash rate that's carbon free. But if we create a carbon free hash rate market that they've never seen before, then we think that their kind of policies and procedures will kick in, and that they will opt to take the carbon free hash rate. And so that's another one that we're integrating, building into what we're doing with Systemic Trust and TerraPool, all part of our Core Plus strategy.
And we don't necessarily.
One question is, and we've been going for quite a while on one question.
The fees are gonna, the premium's gonna be, but for miners, if it offsets pool fees, that's a good start. And, Sheldon said provenance comes for free because it is the Bitcoin blockchain. It's fully traceable. And we think this could be a much better way in terms of having a carbon neutral ecosystem that has call it green Bitcoin, that's easily tradable.
Like I said, the Bitcoin market's huge. The hash rate on the Bitcoin network's huge. And even if we had 10%, 15% of the whole market, it's still a huge market for DMG. So we kind of see this as, maybe it's blue sky, maybe not so much a blue sky because we built a lot of these parts and we've done transactions and we move coins around and we've integrated with the right different institutions. But it's kind of, and it's been a little bit painful for our investors because they keep saying, when's it going to be done? When's it going to be done? But it's coming, and it's probably coming out a lot sooner than we thought. I mean, things are really coming together. So, but it's been a challenge, and we've been breaking ground as a Bitcoin miner into a different world of ESG compliant transactional services that nobody else has done for whatever reason. I mean, probably because it's not easy, but we think that once it's built and proven, that people will use it and there's a market for it.
Yeah, I was gonna say, I'm glad we did spend some time and dive into that because I gotta say, Sheldon and Steven, I've interviewed you guys a number of times. I've heard about all these components, about setting up the networks and the mining and the software and the transactions and the trusts, but I really didn't have that full picture in mind. I was as you were talking, thinking about your background picture. It's a mosaic, but it takes a couple of minutes to really piece together all these different parts. And it does seem now you've really built this ecosystem end to end, where people who are looking for this type of exposure or offer, which I know tremendously well, being in Alberta, especially with the oil and gas industry, this was a huge development and change in that industry. You guys are right on that cutting or leading edge, hey?
Yeah, we think so. And, we've invested a lot over the years in it, and we've done some things right. We've done some things wrong. We made some adjustments, and we kind of feel like, really it's a time game for us now. We just need to finish a few more things off, test it, and, we'll be market ready. And we think we know who the right partners are. And we think that this will, go really well in the market once it's made fully available to everyone to use.
Yeah, very exciting. I know you just came out with your earnings as well, so we wanted to talk about some of the highlights there. Anthony's got some more detailed accountant type questions, but I'll open it up just with some of the key takeaways or highlights in your opinion.
Yeah, I mean, we had revenue of 8.3 million. We mined 87 Bitcoin. We're just under an exahash. One of the things our efficiency improved from 28.4 to 25.6, as we've talked about. By the end of this quarter, we'll be down to 23, and we've given a further out target of getting down to 20. We think that's really important. We've also talked about growing to 3 exahash in 2025. One of the things we feel our balance sheet's very strong, even though we've taken on some debt to pay for our T21 miners. We also, our cash and digital currency is close to 40 million, total asset base, 111 million. And as a proxy for cash flow is our earnings before items excluding depreciation, amortization, stock-based comp was 1.5 million or 19%. So just overall, given this was the halving quarter, and this is kind of the first quarter where as a miner, we're seeing the effects of that. We were hoping initially to have our T21 fleet to offset that in conjunction with the halving. Clearly, it's taking longer than we hoped for that, but we should be seeing the results as we go into our October quarter of being able to generate more Bitcoin, given the hash rate as of recent has been fairly flat.
Yeah, I mean, we're going into I would say one month, and we get to the end of effectively the third quarter of 2024, and that'll be the first quarter where you've had the full effects of the halving, because really the last quarter you had a half effect. The halving happened on the 19th of April, so literally smack in the middle of the quarter. So, I mean, no miner came out with a net income, and those that did post a net income, the line below it showed that their accounting transactions in IFRS showed they had to show the valuation of or the unrealized losses in the actual Bitcoin, because GAAP requires you now to record it at the value, and IFRS is done slightly differently. So when Hive posted a £3.1 million gain for the period, or profit, the next line below that showed that their Bitcoin was overvalued by $20 million. So they had an overall sort of like a net 17 million loss. So it was a challenge for everybody. But some of the key takeaways I saw was actually, when you look at companies to invest and you're quite right, your balance sheet is strong, certainly compared to peer miners. You look at how much you invest, I think it's 88 cents in DMG, you get a dollar. I'm talking US now. You get $1 worth of assets, so your net book value is lower than or higher than your market capitalization, effectively. So that's interesting, because some of the other miners, were like invest $4 to get $1 of assets. So that's quite a considerable difference. yes, it's some of the smaller miners do have some of the better metrics in that space, and there'll be reasons for that. People will look to maybe go some of the bigger miners, but there are some sort of like value plays here. One of the questions I had, and I think you've probably alluded to it as we were going through the conversation. So I noticed you have obviously a loan on the balance sheet, which I'm assuming is to pay for the T21s, the 4,500 T21s that are coming in. But you've increased that loan post the accounting period to 19 million US dollars. And can you give us sort of like an understanding of, is that money going to be used for, I'm assuming maybe for systemic trust, or is it going to be used specifically for a reason, or if opportunities arise?
So what we've done with that loan is the loan has a maximum of 19 million. We've taken 9 of it. So we only have 9 million in debt on that loan, of 19 that we can go up to. So there's another 10 million potentially there that we could use to continue to finance. And so with that loan facility, we like it. We consider it to be low interest for the industry we're in, and sort of the interest that we've seen in this industry and just what rates are at now. It's secured with Bitcoin, as we've said before. And so that gives us a lot of flexibility. It goes as long as we want it. We just pay interest until we want to pay it off. And so obviously we think we're better off paying interest on it and seeing what happens with the volatility of the Bitcoin price. We're believers in Bitcoin. We think it's going to go up. And so our point of view is that we should be looking at paying this off in future months, not at whatever it is, $58,000, $59,000 of Bitcoin. We'd rather be paying it off at $80,000 of Bitcoin or $100,000, and don't know when that's going to happen. But just the math shows us that we're better to wait however many months that is. We don't need to liquidate our Bitcoin HODL. We kind of sell a bit every month for our operations, but our HODL's grown over the last year and a half, 2 years, as we obviously consume less in Bitcoin than the Bitcoin you generate. So we've been quite profitable from a Bitcoin/cash point of view. Not always profitable from a financial point of view with depreciation. So, and as you know, the last 2 quarters were kind of good, positive quarters for us. It's only this, halving quarter that hasn't been as strong as previous quarters, but still not a bad quarter for us. And what's happened on the Bitcoin halving and what's happened on the network hash rate.
Yeah, in terms of, obviously the revenues in this quarter because of the halving are down on previous quarters, because between sort of like starting the year and where we're at the moment, hash rate hasn't at the moment increased. It looks like you've been, to get your efficiency, it looks like you're replacing some of your existing fleet with the more efficient miners to get that efficiency down. But hash rate is hash rate. So in terms of delivering more Bitcoin production, obviously the shareholders want to see you get to that 1.7 exahash as quickly as possible, because like you say, I think it was planned a few months ago, and we've just seen recent updates to say a couple of delays, but hopefully in August now we can see that come through. You've talked about a number of other things that DMG do, and I've mentioned on the podcast, covering the fact that you're not just a self miner. You've helped build facilities. You've got your own mining pool. You're now going into obviously the core and the core plus services that you're going to be providing. You've mentioned about systemic trust and about the exchange. It's sort of like I'm hoping that these sort of like starts, because it's like you've got things in a lot of different pies. But at the moment, the main revenue is coming from Bitcoin mining. I looked at the mining pool revenue, and I think the costs were exceeding the sort of like the revenues this particular period. I think in the last period as well. So, have you got an expectation that you can turn these things around and focus on those businesses that are going to generate real income?
Yeah. So I mean, it's a good point. It costs money to build a new business, and so the pool net on has cost us more than it's yielded us in revenue. But that's okay. It's also been quite small. It hasn't been, 10, 15 exahash where you would start getting over and winning enough blocks that you would have, constant Bitcoin to pay everybody on full paper share, which is how we pay people. So it takes a little bit to get that up and going. And we expect that investment. When you look at pools, generally a pool is not a great business. That's why there's only a few big ones out there, and the rest are kind of small, and it's hard for them to get traction because they don't normally make money unless you have enough exahash on them. And we kind of see it from the point of view that the things the pool can do to generate revenue outside of just trying to rely on a pool fee is what makes our pool more interesting. And so the idea that, users of our pool could get premiums for their hash rate, they could get premiums for the Bitcoins generated, that they will be able to operate with SOC 2 compliance, which should lower their audit fees for public companies, that they will be OFAC compliant and won't one day get a call from CRA or the IRS saying, what's going on? Are you guys helping terrorists finance things? These are things that, are added to what we're doing. And I think the value of that will come out over time, and people will see that as sort of a standard way of doing business. It's not there yet, but we think this whole, even if you take away the carbon side of it, just what we've done without the carbon side of it it's really interesting. And the fact that, by being able to charge institutions, especially trading ones, for using our pool, a nominal amount of money, our goal is to have the pool be zero fee, sort of like Foundry used to be, because the pool itself can generate service fees enough that we don't need to charge the users that are giving the hash rate to the pool a pool fee. Now, it's not that way right now, but everybody that's talked to me about joining or has been on TerraPool in the past or right now, they will know that my vision is to make TerraPool free to all the green carbon neutral miners, and to get those fees from the users of the services that come out of TerraPool. And if you think about it, Air Canada's kind of doing the same thing. They're like, hey, come and use our, we got to pay for the ticket, but if you want it to be carbon neutral, the user pays for that carbon neutrality, right? And so for us, the users aren't the people giving the hash rate in. The users are the ones that want their information, like their transactions, put through the blocks that we create.
Gotcha.
And so that's the same for ordinals. Like, we've charged premiums on ordinals because it's carbon free. And we've said this, to you guys before and many times. The only reason we got Bored Ape Yacht Club was because we were carbon neutral. They weren't willing to put anything. They was all on the different, Ethereum chains. They weren't willing to put anything on the Bitcoin blockchain until they found out that we had a carbon neutral mining pool that could do it without carbon. And we think that that'll just continue to grow over time. Just people need to know.
I definitely agree. And I definitely think you guys are onto something there. Now, Stephen, I wanted to circle back just on the T21s. You cited some supply chain challenges, and we've discussed a number of purchase orders with a number of different CEOs. A lot of them are saying right now the bottleneck in the industry is obviously power, megawatts, facilities. The actual mining rigs themselves are fairly quick and easy to order, to have delivered. What challenges specifically are you finding with these machines?
Yeah, no, that's exactly right. It's all that power distribution, connectivity that has been the real challenge here. So it is not simple to be able to just connect megawatts of power to these mining containers. And that's one of the things that we said on the earnings call, is just that the subsystem that includes the transformer and all the circuit breakers that would be connected to the container, just getting that all integrated has been a greater challenge on this go around than we expected. We've used suppliers that we've used in the past, but we've also, as we've been looking at new sites and really looking forward in terms of how we're going to build out power distribution. We really see we can alleviate some of the bottlenecks that we have with just limited labor supply in North America, putting these systems together instead of being a relatively short amount of time, as we've kind of seen the extension of several months in terms of what it's been versus what we had originally expected. So as we look going forward, it's getting more turnkey subsystems of that power distribution. As we build more distribution lines, making sure we have components, as we said, that have double-digit week lead times that wouldn't normally expect to be like that. And as AI and other things are built out in North America, there's just a lot of demand for these components, a lot of demand for this labor that will be more proactive and addressed differently than we have in the past.
I mean, when you think about, just talking about like our middle voltage power distribution, one company makes the unit sub, the actual transformer, another different company makes the base it goes on for outside. Another company will supply the breakers that go into it. Another company supplies the wire. Another company will supply the logic in it. There's little computers in their PLC systems. And then another company has to take it all and put it all together. And they all have to like do it properly. Then it has to, pass CSA. So it's got to be done in a certain way that meets all the regulations so that it can be turned on by the electricians here that are doing that right now. So what we're trying to do is we're looking at all those different companies and all that different sourcing. And we're saying, how do we get all of this sort of pre-built and made in like one company or two companies, not 8? Because that's where if one falls out, the other ones can work perfectly, but it really screws up our timelines and it really makes a problem. So, we had a problem where some stuff wasn't done to code properly. That's slowing us down because it has to be re-engineered. Not only that, there's an engineer or two in there too. So it has to be re-engineered and all the parts have to be rebought that are different. And you have to go through those timelines of all that sourcing to get those parts here. And it's just made it longer than we wanted. So we've just kind of taken that problem and, we never had this problem before because there's never been such a push on power before like there is now in the industry. And so when we built Christina Lake 8 years ago, we could do everything we were talking about with multiple suppliers in a few weeks because everything was in a warehouse waiting to be shipped to us or to our suppliers and vendors. Now there's such a strain, and when you look at this, and I was trying to figure this out, and I've said this before, when you look at power the last 15 years in North America, it's been about a 1% pretty much growth of power, new power needed as North American economy builds out, right? Maybe 2 or 3 during the 80s when it got a bit crazy, but there's always been investment in power. If you look at the last sort of 5-6 years, just before COVID, there was not very much investment into new power, but industry started growing. And now what you're seeing is like 5-6% per year demand for power, and there's no infrastructure for it. And so there's a huge push where when you're talking 5-6%, you think, well, what is that? Well, when you look on that trillions of dollars of economy, trying to build power transmission, power distribution, unit subs, all that kind of stuff. These are huge numbers. And this is why we've never run into this problem as DMG until this build out when we're building this 30 plus megawatts, where last time we did it, it was all just sitting there and people were happy to give it to us and wanted to sell it. But now everybody's fighting for it, and it's taking us a long time to get all these trades to do it. So we've just sort of rethought it and said, well, we can't do it the way we used to do it. We need to change the model so that we're not relying on lots of different vendors, suppliers. We need to concentrate it into almost like a primary contractor that puts it all together and delivers on a certain time.
Yeah, you mentioned power and infrastructure, and probably the lack of investment in the current infrastructure as well would be added to that list. So not about future power, but about the power you've got at the moment. I don't think any of the governments have been investing anywhere near the amount that's been required to get that infrastructure where it should be. But talking about power in bigger terms, Bryce and myself were very fortunate to be in Dallas in June when the Core Scientific announced their big deal there. And we got to speak with 40 or 50 of the New York Wall Street analysts and get their view on Bitcoin mining, on HPC. And in all honesty, you know, we've said this many times on the podcast, the conversation at the moment isn't about mining. They're not interested. You know, they're interested in HPC. So obviously, it would be unreal of ourselves to not mention the fact that, you know, from DMG, with your outward look now over the next, you know, sort of 18 months, 2 years, is this a sort of space that, you know, you're interested to move into? What power would you have available to sort of, you know, to utilize in that space if you were to think of going down that route? And is your phone ringing as much as all the other CEOs' phones with regards to the interest, or do you think the Core Scientific deal's a one-off?
I don't think Core Scientific's a one-off. I think that this world of wanting information and more complicated information is not going to change. You know, when you think about the old days of when I got my first computer, my first, you know, sort of IBM PC, and I could, you know, go into, you know, I don't even think Google was around back then, but that had the search browser, Internet Explorer, I think it was, and you could find all this stuff, readily available information. And over the years, it got faster and faster. And now we live in this economy of, you know, if my kids want to know something, they don't ask me, they go on Google and they'll watch a YouTube video and they'll figure out how to do it. They'll never come and ask their dad how to do something anymore because Google will tell them. And that's not going to go away. And they all use Chat GPT for whatever they do. And
Homework.
Homework, yeah. Well, they're both in college now, so we'll see how that works. But
advanced homework.
yeah, well, one's a computer coder, computer science, so he uses it a lot for coding. But anyways, that economy is not going to go away. I mean, people have had the taste of it, and it's not going to go away. So, you know, for DMG, you know, we've seen that early on, and you know, we've been looking at this in a few different ways, and a lot of people, we said some of this on our Q3 call. A lot of people don't know that we've looked at Christina Lake as a potential high performance computing location. We've done some work on that. We originally designed the substation to be twin, so our 85 megawatts, we can add a second 85 megawatt onto it to get to 170. We've priced out that second substation, so we kind of know the lead times and the price to do it and put it in and what that would look like. We've talked to our utility about doubling our power capacity that we have, and specifically, we've talked to them about firm power, not non-firm power. So firm power is basically they have to deliver that power to us unless there's some type of emergency interruption. Non-firm power can be interrupted. You hear about Bitcoin miners calling it curtailable power or curtailment power. We can't really use that for AI or HPC. So we're in those discussions with them about increasing the amount of firm power versus non-firm power that we could have. We've already worked with the utility to loop feed us. So what that means is that if a substation on one side goes down, a substation on the other side of us, saying we're in the middle, like a triangle, one of their sides goes down, the other side will feed us power. So we can be fed two different ways, same line, but the way we tee into it, we can be fed either way, which is great for redundancy. And you know, so if you have redundant power that way, plus you have two redundant 85 megawatt substation or unit subs there feeding into our distribution line, then we feel that's quite strong. We already have fiber provided to us. We've got two other options to add more fiber in and different routes so they wouldn't cross each other. And so we've done some work on that. Obviously, we have 33 acres. We have a lot of land. So, you know, we're looking into this, and you know, we can build infrastructure and power infrastructure. Probably we would need like a partner, sort of like a CoreWeave, to actually build out the HPC part. And so that's kind of where we're at. putting this together, we've had some discussions with our board. There's a lot of people in the market, promising or wanting or asking about, co-location or partnering and working with us. So, we're going to work our way through all of that. But we do think Christina Lake could be a very good location for AI, just from, the things I've gone through. It's a bit remote. So one thing that we do worry about is just talent. Do we need talent on site for an HPC operation, or can it work remote with, some people on site here? But I think, we can overcome all of these questions. We are very close to Spokane as well, being only an hour or so away.
Maybe the client has the expertise to bring those people in to do it, because I think that's what's going to happen in Texas at the sites with Core Scientific. They're effectively just the guardians of the facility, not the actual technology.
Yeah.
85 megawatts, if you can get that. I mean, people think, oh, that's not 85 megawatts is a significant amount of power for HPC, and if you look at revenues, you'd have to be using 850 megawatts to deliver Bitcoin mining to them sort of levels of revenue. So you don't need the big sites. I mean, 85 would gets you a very, very nice piece of the market if you can be successful in that way. So that's good to hear that you're actually keeping your eyes wide open to all the opportunities available to you.
I mean, that's still billions of dollars of equipment that would need to be invested. Billions.
It depends. Yeah, so it depends who's going to help fund that. I mean, because CoreWeave are paying, more than $500 million, $600 million in advance to Core Scientific to deliver that contract. So, which gets repaid, but it gets repaid when the revenues start. So, they're actually in a really good position, because, like anything, who knows, the Bitcoin price today is, I don't know, it was hovering at 57,000 before we started this podcast, and who knows where it's going to be next week, the week after, and next year. I haven't got a clue. So having something a bit more predictable in my bailiwick of skills is something for consideration. But thanks for your answer on that one.
Yeah, no, it's been a great discussion, you guys. We've covered a lot of ground. We're at the hour now, so I wanted to give you the opportunity for any final thoughts, upcoming catalysts we should watch for, but definitely interesting interview. I say this every time we have you both on. I learned so much about the progression of this entire space, and now seeing this entire mosaic, as I say, come together is really quite something. So I'll throw it back to the both of you for any closing thoughts, but thank you again for the time and information today.
Yeah, I'll start. Just in terms of some of what we said on our earnings call about the beginning of the year, we said we're going to fix the execution of our software team. We showed that we built the platform for systemic trust. We're going to shortly be introducing a new version of TerraPool, and subsequently after that, a new version of our Helm and Blockseer Explorer software. In the same vein, we said that with these supply chain issues and the way we would be executing Bitcoin mining going forward and looking towards AI as well, that we were going to be doing things different, and we have vision to be able to take the way the supply chain has evolved to be able to execute much more quickly, much more effectively. And we're really excited about having already shown some track record on our revamped software, and going forward here with our 12 megawatt hydro deployment that we're expecting in the early part of next year, that we can demonstrate results on that as well. So we're, as a management team, I think Shella and I are just very excited about where we're positioned, and really being able to show, as we talked about, TerraPool generates blocks, systemic trust has transactions for financial institutions to fill those blocks, and really have this carbon neutral ecosystem really come into its own in the coming year.
Yeah, and I'd just add that, on M&A, this ongoing, depressed Bitcoin price, I would call it, or not expected by many miners, I think that may push some M&A to happen. I'm not a big fan of M&A just because it's usually cheaper to build more capacity as a Bitcoin miner than buy another Bitcoin miner. But now I'm seeing it a little bit differently, where I think that some of this may happen. People have to renew their fleets again, and it's a good time for M&A when fleets need to be renewed. And so I can see, DMG getting more interested in M&A now.
Definitely.
That's a good point, Sheldon.
We'll continue to keep our ears and eyes open. Anthony, that's very similar to your sentiment there. I know for a long time you were saying on the M&A front, building it was more cost effective, but obviously the dynamics have changed here. So we'll be aware of that. We'll keep watching for any news and updates. As mentioned, you guys, we've left a link to the company website in the video description below. If you want to go in, take a closer look, leave a comment in the video description below. Any questions you may have for the team, will help pass those along. Thank you so much for your time today. We'll see you here tomorrow.